Welcome to the Honest Money Show. Thanks to our sponsor Bitaroo for making today's episode possible, Australia's biggest Bitcoin-only exchange. Hi Joe, welcome to the Honest Money Show. How are you?
Thank you for having me. Yeah, I'm very good, thank you.
It's a real pleasure. Earlier on this year, you released a video that went viral, and it's such a pleasure to have you on. I really like how you presented the idea that you've put forward. So for the listeners, it is the video is called "What's the Problem?" and I guess I want to start with that. So over to you, Joe. Let's talk about this problem.
Okay. Well, I mean, the problem is that a big red button exists. And that big red button allows the people who have access to it to corrupt the money in a variety of ways. And so it gives them exorbitant privilege in the financial system over and above everybody else, which is fundamentally wrong. And it's the existence of this big red button that precipitates all the issues that we see around ourselves today. And so, the social deterioration, from very explicit things to much less explicit things, are all just downstream consequences of the fact that this big red button exists and is abused. And if you remove the big red button and you separate money and state so that nobody can print for free what someone else has to work for, then you resolve all of these issues. And so there is nothing more important than fixing the money. If you fix the money, you fix the world. And the video is just a story. It's just a story, an accessible story for everybody, whether you're a child or an old person with, or whether you have any financial experience at all. Doesn't matter. You can watch it because it's just a story. And humans understand stories, and you understand after 30 minutes the importance of having incorruptible money and what happens when you don't. And what happens when you don't is you end up with a world like today. And when you do have incorruptible money, you have human flourishing. And that is what we have in our future once we do separate money and state with Bitcoin. So I would summarize it like that. And if you haven't watched the video already, please do watch it and then share it with friends. You will understand after 30 minutes why Bitcoin is so important.
Yeah. Absolutely. And I've already shared it with so many family and friends, and it just, a light goes off. And that's all that I can hope for. If you can just spark their curiosity enough for them to continue learning about it, I feel I guess half of the work is done, right? What I love in the video that you've done, Joe, is you really humanize the problem. In a way, like you've presented this very heavy topic in a very human and empathetic way. But I want to talk about it because you have a background in finance, like you're from a traditional finance background. And I'm curious to know the backstory. Is this problem something that you were always aware of throughout your studies and your career?
No. No is the answer. I mean, I studied physics at university. And then I, at 21, joined Goldman Sachs, and I was there for 5 years, and then 5 years at other big investment banks. But you tend not to get taught about money at school for obvious reasons. If somebody has access to a big red button and they constantly abuse it, it behooves them to not educate the population that they have a big red button and they abuse it. And so we are not taught at school or at university, even if you studied economics, and I didn't study economics, even if you studied economics, you would get taught inflation is good. Inflation is good. It's Keynesian economics, which is just total nonsense. Absolute total nonsense. And so we have a population, even in the financial sector, who is taught the wrong thing, actively taught the wrong thing, taught to not question the fact that a big red button exists, and to actually celebrate that the big red button exists, because without it, we would be impoverished, which is 180 degrees incorrect. And so when you go into finance, whether you have a background or not, you're either starting with no knowledge or you're starting with the wrong knowledge. And then you go into the financial sector and you become very, very specialized very quickly because you would join. Well, for me, I joined an equity derivatives desk, but there'd be 100 different desks in an investment bank with very niche focus on a particular type of product within the product suite offered by investment banks, which is, layers and layers down from the money printer. And so you learn about your particular area and you become an expert in your particular area, but not the big picture. And no one's really questioning the big picture because the banks are the beneficiaries of the big red button. So, it's like that. It's like that saying you can't convince somebody, you can't get someone to understand something they're incentivized not to understand.
Yeah, absolutely.
Right? And this is why the financial sector has also pushed back on Bitcoin or tried to undermine the credibility of Bitcoin over the last 15 years until they could actually make money out of it. And now they can make money out of it. Now it's a legitimate asset class. And so, even the whole time I was at the investment banks, you were very aware of quantitative easing because I went through the 2008 financial crisis there. And the banks only survived because of the money printer, because of the backing of the governments and the central banks. It's the only reason the banking sector survived. And so they're direct beneficiaries of this. But because of the framework and because of the lack of consideration or understanding or awareness of Austrian economics and Bitcoin, you just treat it it's just normal. It's like, your fish in water. You don't question the water. You don't question what's outside the fishbowl. And so it was only after leaving finance, when I spent 10 years there and then I left, started a quant engineering company with a colleague focused on sports. We write algorithms and mathematical modeling for sports and then use real-time engineering. Even going through that process as an entrepreneur, it was much more eye-opening because you're not within the safety net of the investment bank. You're thrown right to the other end. It's like you've gone from being a direct beneficiary of the money printer to being the last person to benefit from the money printer, because there's no bailouts for the small businesses. There's no bailouts for the small business owners. It's like they're on the receiving end of all the policies from the government. And a great example of that is during COVID, the small businesses have to close, the big businesses can stay open. There's not a single set of rules for everybody. And when you're an entrepreneur trying to build a business, you're taking risk, you're investing capital, you're trying to find products, market fit, reach profitability, find customers. You're doing all of these, but you're having to do those things yourselves. And you become much more aware of the economic backdrop and the risks that you are now subjected to that you weren't subject to before, right? Because you're further from the money printer. But even then, you have to have enough contact points with Bitcoin for it to sort of stick. And you've probably gone through the same thing. And here's that, the first time someone tells you about Bitcoin, it's very rare. You go, absolutely, I get it. Because you're either dismissive, you're starting from the wrong place, you're hearing it from the wrong person at the wrong time. It's not quite relevant for you.
Yeah, absolutely. The first time I heard about it was 2017 and I just dismissed it until last year.
But most people do. Most people do because it's so, you either don't recognize there's a problem that needs a solution. So this solution comes along and you go, so what? Right?
Well, in my case, I actually did. So it's so funny. I remember this today. I watched a documentary from 1996 about this problem. So this problem is not a new problem. There've been people talking about it since it commenced, and many politicians have warned against it. Many economists have warned against it, but I never connected the problem to the solution, and that is Bitcoin being the solution. Until just recently, and I think that gap still exists for many people.
Oh yeah, absolutely does, and I suffered from that as well, because you're like, well, Bitcoin has all these qualities, unless you recognize there's a shortfall in the existing solution. You don't recognize the improvement. And so it took 2 or 3 interactions, but it was only in 2020 that Bitcoin really hit home for me. And since then, I've just been learning more and more about it, spending more and more of my time on it. But you reach the point, and sounds like you're right, either already through the event horizon of this, or very close to it, is that once the penny drops sufficiently, you realize just nothing else is important. This is the only thing that matters. It's the only thing that matters, and it fixes everything. And once you realize that, you just don't go back. And it's like this one-way door to a new world. And you realize that you've been able to connect the dots in such a way that it's become obvious. It's become obvious through critical thinking, and it's not a belief. It's not it's not something you're going to change your mind on, because it's taken rigorous critical thinking to get there, and therefore your realization is, hang on a minute, everybody's going to figure this out. And once everyone,
it's a matter of time.
It's a matter of time. And then once everyone figures this out, the world changes. But not everyone figures it out in one go. You've got 8 billion people, and this is an S curve of adoption, but it's not an S curve of adoption with churn. It's not like Facebook, for example. I'm not picking on Facebook. It's the first one that came to mind. They probably have, I would imagine, I'll get these numbers horribly wrong, half the world's population have a Facebook account, maybe, but most of them don't use it. Most of them have created a Facebook account at some point in the past, used it for a bit, and then churned. And now they don't use Facebook. No churn with Bitcoin. Once you get Bitcoin, you never go back. It becomes, you're not just a perpetual user, a perpetual holder. You actively work to drive the network.
Yeah.
It becomes the most important thing in the world. And so you then help accelerate, and you build. And what tends to happen with Bitcoin, and I realize we're just jumping straight to the solution here, I knew we can come back. But and you've probably seen this yourself, the people who find Bitcoin tend to be the more motivated people, the most
high agency
people.
Absolutely.
And what do you get when you have high agency people becoming convinced about something? They make stuff happen. They build businesses. They educate others. They drive adoption forward. And that's exactly the segment of the population you would want to initially adopt something which has a 0 churn rate, which eventually is going to consume the world, because it just happens faster. It's like it becomes a self-fulfilling outcome.
Yeah.
So yeah, I've on there, but
yeah, all good. I just wanted to go back on something you said to just create clarity for listeners. So when we say there's 0 churn rate in Bitcoin, we're not talking about Bitcoin the asset or the token. We're talking about Bitcoin the protocol. So once you can buy and sell Bitcoin or lose money in Bitcoin and never come back to it. But what we're talking about here specifically is understanding Bitcoin the protocol.
Yes, yeah. So it's having the penny drop with Bitcoin. Yeah. I've never met anyone who has been a Bitcoiner and then decided, no, this Bitcoin's not for me. It doesn't happen. It doesn't happen. It's a one-way door, and it takes just a little bit of work to get started, and it becomes infectious. It's a positive infectious disease, really. But and so like you said, but the real problem we have is trying to get people to understand why it's important. Because if you understand why it's important, then you have some motivation to then go and do that little bit of work to start the ball rolling. But it's like the same issue that I had, is that, you have this thing, but you don't know where it slots into your worldview. Like if I bring this new piece of technology to you, you feel like, that sounds great. Why is it relevant? Like, if you don't understand the problem, you don't recognize the solution. And so the focus of the video is literally just to help everyone understand what's the problem, and do it in a way that connects up front to us, for everybody something that impacts them in their lives, because it impacts everybody in almost every respect. So it's sort of connecting the real outcomes in your lives back to the money printer in a way which would be very hard to do the other way around. It's very hard to take all of the things we see in our lives, the deterioration in all of these different aspects of society and life in general, and to reverse engineer where those must have come from. That's a very hard thing to do. It's much easier to run it the other way around and say, well, imagine we had this far off island and we started in a certain place and then we made one key decision. What does that mean? What does that then mean? What does that then mean? And then you end up with all these issues, and then it's very clear, like they all just came from the big red button. That's it, And then you abstract the entire financial system away just to this big red button that they can just press, because the system is super complicated and largely inaccessible outside of a small number of people who have spent the time and the energy and typically have a highly academic background so they can understand the terminology, that deliberately obfuscated terminology used, etc. To actually understand how the banking system works is not relevant for most people. The simple thing is there's a big red button, they press it, they print more money. Or they press it and they change the censorship resistant nature of the money. That's it. Everyone can understand that concept. You don't have to understand what quantitative easing actually is in practice. You don't have to understand how the banking system works. Nothing. Abstract that all away. Big red button. No one should have a big red button. Easy.
Yep.
And that's the video.
Start saving in Bitcoin with Bitaroo, Australia's biggest Bitcoin-only exchange. Bitaroo offers easy tools and advanced features. Join thousands of happy users making their first Bitcoin purchase today. Download the app or visit bitaroo.com.au.
Yeah. Let's start with something like low-hanging fruit, something that everyone can relate to, and that is inflation. So in Australia, we have a cost of living crisis. Inflation is one of the issues that we're dealing with among many. So what can you teach us about inflation and how that is related to the big red button?
It's entirely due to the big red button. Inflation is not because of some foreign dictator or greedy businessmen or anything like that. It's just not. It's because you print money. And we all know this deep down, right? We've seen, I mean, certainly in the UK, I assume it's similar in Australia. You get taught about World War One, World War Two, the causes of World War Two, and linking that back to hyperinflation in Germany and World War One. And there's been many other instances of hyperinflation everywhere else since, including recent ones in South America and continued ones around the world. But it's just money printing. That's all it is. You print more money, you debase the currency, all the prices go up. Simple as that. If you don't print money, the prices go down. And so we've been conditioned and gaslit by Keynesian economics and the central banks to consider that inflation is a necessity. And so all the central banks around the world would say we need to target 2% inflation every year.
It started in New Zealand.
I'm sorry? It started in, you're right.
New Zealand.
Yeah.
The island long far away.
Yeah. But they all justify their choice of 2% because everyone else chooses 2%. That's it. It has them to explain why we need 2% inflation. And the answer is, well, everyone else uses 2% targets. Well, that's not a reason. That's not a reason why we need it. Just because you all do it doesn't make it the correct thing. But there's another aspect to it there. They get to measure it as well. And so they get to target 2% and decide how to measure it, and they change how they measure it. So, they'll tell you it's targeting 2%. It'll actually be 3%. But it's 10%. because you feel 10% in the shops.
It feels 10%.
Because when the price of stuff goes up, they take it out of the calculation basket and they replace it with something cheaper. And the logic would be, well, because the price went up too much, people don't buy chicken anymore, they buy pork. So we'll replace chicken because the price has gone up with pork, which didn't go up as much, and therefore inflation is lower. It's like, that's not how it works, guys. That's not how it works. And so the fact that A, we need inflation is incorrect. B, the way that they measure and report it is corrupted. And so it mismatches our expectations. But let's dig into why we don't need inflation, and also why inflation exists because of what they do. And so the first thing is to think about a scenario where nobody could print money. If nobody could print money, there is no way to inflate the monetary supply. And so what happens over time is that prices go down. And this is very logical, but entirely opposite to everyone's life experience today. Prices go down because of human action. Because people try to become more productive over time. They try to outcompete each other in a free market. And so there's an example in the video where I should say the presentation is built on the shoulders of all the great work done by all the Bitcoiners around the world over the last 10, 15 years. And so there's a section here where the islanders are figuring out how to live on the island. And this is just Jeff Booth's Price of Tomorrow, which I would encourage everybody to read in 2 minutes. I mean, it's a horrible compromise of what he's written, but it gets the key components across. And that's when you have a free market with perfect money, i.e. money people can't print for free, prices go down and quality goes up. And that happens forever. And
we have the opposite.
We have the opposite. We have prices going up and quality going down forever. And you're like, well, okay, well, how have we gone from what should be obviously true to something to what we see today? And perhaps you just run through why this is obviously true. If we have, so I'll just give you the same example in the video. You have people washed up on an island and are starting again. But the first order of the day is just trying to survive. So that everybody individually is trying to catch their own fish for food. They're trying to cut down trees for firewood and building materials and build their own houses. Super inefficient because I'm terrible at fishing. I'm terrible at building things, but I'm all right at cutting down trees. Right? But everybody is sort of just scratching a living, right? Focusing on themselves. But humans being humans, they realize that some people are better at fishing, some people are better at cutting down trees, and some people are better at building. So they specialize. So now they can produce twice the amount in half the time. You increase the amount of goods available to everybody. And now everyone has to actively trade with each other because, I only have wood. I can't eat wood. I need to sell them for some fish. And now you have an active economy where quantity's going up. So prices begin to fall and quality is going up because we're focusing on things and we're better at it. I can create better building materials out of wood than you could because I'm specialized in it and I get better at it over time. I improve my practices. I become more efficient. I build better tools. So now I can increase the quantity further or I can reduce the cost of producing it. And so prices go down and quality goes up. And this is just natural. And there's lots of woodcutters, there's lots of fishermen, there's lots of people building houses. And so when you're making a decision about swapping your productive output for something else, that decision is based on a combination of price and quality. I want the highest quality at the lowest price. So everyone's competing on a combination of the two, which drives prices lower and quality higher. This is like basic stuff. And we all know this to be true. If we were all put on an island today, this is exactly what would happen. Okay, so human action in a free market with perfect money is prices go down forever and quality goes up forever. That's true. So why the hell does the world not work like that? And the world doesn't work like that because they print money. And so if you think about those interactions on the island, every economic interaction is a price signal to everybody else. So let's say there were two home builders, right? I'm making this up now. So imagine there's two home builders. One of them falls ill. So the other one says, well, I've got no competition anymore. I'm going to put my prices up. And now everyone's paying more for the house. That's a price signal to the rest of the market that he's making a greater level of profitability versus his inputs. It's a signal to everyone else on the island. Maybe someone else should become a home builder and go and compete with this guy. Right? That is a price signal. And so somebody stops cutting down wood and they go and focus on house building. They bring more supply to the market. They compete with this guy. They put his margins under pressure. They make him produce a higher quality output. This is free market economics, right? And so in a free market, the fact that people trade with one another and the prices are visible to people is the signal that drives long-term productivity. Okay, and then compare that with the ability for somebody to print extra money. So now if we think about, one more thing I should say is that you should think about the prices falling over time as society's productivity accruing to the money. So the fact of competition and technological innovation drives all of the prices for all of the products and services lower. The money you have today would buy more tomorrow than it does today. You would have deflation in an economy.
Yeah,
right?
Which we're taught that it's bad.
We're taught it's bad. Now, deflation is bad if you're leveraged to the eyeballs, which is the existing system is leveraged to the eyeballs because it's a debt-based system, and that's the only way it can survive in an inflationary Keynesian world, right? So it's bad if you're indebted hugely, which the world is. If you were thinking about how the world actually works, the natural state of the world is deflation. And the argument would be, well, people wouldn't spend money in a deflationary environment. But we already know that's total nonsense, because you have a smartphone, you have a TV, you spend money on credit cards. All of these things would be cheaper if you waited a year. You'd get the same technology for much lower price in a year's time, but you don't do it. You don't wait a year to buy a TV or a smartphone or a new laptop. You don't. The price appears to be the same in a year's time because it's twice as good through technological innovation. But if you bought the same product in a year's time, it'd be 50% cheaper. So why don't you just wait a year? You don't wait a year because of the utility value, because you want that, because it makes you either makes you happier in some way or it makes you more productive.
Yeah.
You can be more productive because you buy a laptop to allow you to do work and host podcasts with people around the world to unlock more economic access for yourself. You spend money on a credit card and then you pay 20% annual interest on it. Why would you do that? Just wait a month. Spend it in a month's time. This is deflation. You don't do it. It's not human. It's not human. What deflation does is drive higher quality decision making, because for the very first time, you're in a situation where you have the option to retain your money. Because right now you can't retain your money because it's melting. It buys less in a year's time than it does today. So you feel the constant pressure to either spend or speculate to try and protect the purchasing power of your money. Whereas if you know in a year's time, the money's going to buy at least the same amount and probably 3-4% more because of the productivity gains accruing through the free market because the prices are falling, then you start to think, okay, I'm now in a position to make better quality decisions around my spending and around investment. I'm not going to waste my money frivolously on stuff I don't need today. And think about the quality of the upgrade in decision-making quality that brings to a society. And yes, you would see a drop in spending if a society went to a deflationary one immediately. But the drop in spending would be a good thing. You wouldn't be spending money on stuff that is unproductive or unnecessary. You funnel more capital to the things that are productive, are necessary, which then compound very, very quickly, because good decisions allow more good decisions, And very quickly you end up with an economy that's far stronger and far bigger than one which is driven from inflation. So deflation is absolutely the natural state of the world. It is where we need to return to as humanity, and would very quickly put the whole of the economy on a much stronger footing very, very quickly. Now, I'll caveat that with it's extremely difficult to get there when you are leveraged to the eyeballs like all the governments and companies, etc. So it depends on your starting point. But if you're starting from zero, deflation is the natural outcome. And so you were wanting to understand where inflation comes from. Then it's like, if this is the natural state, like how do we not get this productivity accruing to the money? Oh, one last point I should say, because the productivity accrues to the money, you don't have to be productive yourself to benefit. If you're old or young and you are not contributing productively to society, you are still benefiting. And this is what's wonderful about capitalism. Actual capitalism, not what we live in today. Right?
Yeah.
Actual capitalism is that the productivity accrues to the money, right? Everyone's working in their own self-interest to the benefit of everybody else. And it's exactly the same with Bitcoin. Everybody's reacting to price signals in capitalism and trying to make good decisions, which leads to competition, innovation, technological evolution, driving prices lower and raising living standards for everybody. It's amazing. This is just leave people alone, and things resolve themselves. It's the interaction, it's the interference and the corruption of the money which makes everything deteriorate. And so, imagine we go from the island scenario now, and instead of someone not being able to print money, someone is actually able to print money. And so they have a big red button, they press the big red button and they print more money for the government. Now, when the government prints money, it belongs to the government. And I'm using government and central bank interchangeably because for most people it doesn't matter, because the central banks are independent, but they're not independent at all. Nominally so, to try and give some level of credibility around the fact that they just abuse the money on behalf of the government, but they can be rescinded. Their mandates can be rescinded, changed by the government, etc., whenever, so they're not independent. But when you print money, it goes into the coffers of the government, and then for that money to enter the economy, it has to go from the government to those people connected closely to the government. So typically the banking sector, but it could be direct with pharmaceutical companies or these sorts of things. They are the first recipients of that freshly printed money. But if you go back to thinking about the price signals for the home builders, if there's suddenly an increase in demand for the houses and there's only those two suppliers, the prices will start going up. And it'll be a signal to other people that, again, there is extra profitability here. I should become a home builder too and compete for this extra profitability. But there it's demand. If instead the government comes along and has got freshly printed money and it spends it with the companies close to the government, it looks like demand. But it's not demand. It's just fresh money. It's just extra money. But it causes the prices to go up in those areas connected to the government, which is a signal to everybody else in the economy. There's a demand-supply imbalance. There's extra profitability to compete for, and you begin to suck in active capital and motivated entrepreneurs from other parts of the economy closer to the government. But they're only being pulled closer to the government because you printed extra money. It wasn't demand. And so you're pulling the most productive people in society away from other areas of the economy where they were contributing competition to go and fight for something that's not real. And so the prices stop declining in the other parts of the economy because there's less competition, there's less focus, there's less innovation. And so if you think about what that means for the deflation begins to slow. You don't get the rapid technology increases that accrue to the money. you begin to undermine the productivity gains in the free market that previously were accruing to the money. And the more you do this, the more they undermine them. So just by printing money, you erode the purchasing power increase of the money.
Yeah.
And without even thinking about the negative impact on top of that of all this extra money washing around in the economy. Right, so that's the first one, is the misallocation of capital. The second is when those businesses have received money from the government and they've made profits, they have to run their business using humans, material input costs, interacting with other businesses. So they begin to spend with other people in the economy, and those people spend with other people. And eventually all this extra money gradually washes through the whole economy. But the net impact is that it starts to increase the input costs for everybody. Because there's more money. It's not more demand, there's just more money. And so when the input costs go up, whether it's human or energy or raw material inputs for everyone, every business is reliant on those. It doesn't matter what business you are. So if you're thinking about a previous state where you had a price for your service or product and you had an input cost and you made sufficient profitability given the competition in the market, that the profitability justified you being the entrepreneur. Because it's not riskless. It's a lot of stress, a lot of hassle. It doesn't suit everybody, right? You're employing people, but you justify enough and you make as much profit as you can while delivering the highest quality service at the lowest price to make the books balance given your competition, as we talked about in the free market. If your input costs start to increase, your profit margin is getting eroded. So now you're left with a choice, right? You needed that profit margin to justify running the business. If you make less profit, you'll start to think, well, I can't justify running this business anymore. I'll just close it down. I'll go and work for someone else. They can take the risk. And if you do that, you reduce competition in the market and the prices start going up or they stop declining. So for every business, you now have to make a decision. It's like, how do I reinstate the previous profit margin I had? This is not me being greedy. This is just me reacting to the fact that the input costs have gone up. And so now I have a choice. I can either, if you think about a product, I can either just pass on the prices directly to the customer. So I keep the product the same size, the same quality. My input costs have gone up, so I'll just raise the price. Like, very visible inflation. The alternative is to say, well, I don't want to put the price up, so I'll keep the same quality of product, the same price, I'll just make it 10% smaller. Right, which is shrinkflation, which we also see.
Yeah.
You know, chocolate bars constantly getting smaller, for example.
Well, for us, it's chips bags, like crisps. I don't know what you call them. in
Or
the UK.
air. Yeah.
Full of air.
Full of air. And this is the same thing. This is just shrinkflation. So you've got visible inflation where the price goes up. You've got semi-visible inflation, and it's semi-visible because sometimes you don't notice, or you're tricked into just questioning your own memories about how big it used to be, or the qualities, because it's a very gradual process. But then the third one is to say, well, I don't want to make it smaller, and I don't want to increase the price. What if I could keep the product the same size, same price, and I just compromise on the inputs to try and reduce the cost of them again? And the easiest way to do that is just to fire people. You just find a way to have fewer humans involved in producing it. And so you fire them, you increase unemployment, fresh problem for the government to deal with. Or you compromise on the quality. And so if you think about a physical product, they'll start to break sooner because the components they used to use, they've replaced with lower quality components. And so it looks the same, but instead of lasting 2 years, it now lasts 1 year. And you have to rebuy it. That's still inflation. You're having to buy it more frequently. It still costs the same, but it's a worse product. And so this is why we start to feel like everything is deteriorating around us. Right? And this is hidden inflation. because the price doesn't look like it's changed. It's not obvious the product's changed, but the quality's been compromised. And if you think about other types of products, they're not all mechanical products. Like that would incorporate our food as well. So now, a food manufacturer is trying to move to ever lower quality food components. The fresh ingredients just replace increasing levels of industrialized sludge. The product still looks the same. It's just unhealthy for us, increasingly unhealthy. And then we start consuming things we should never be consuming. And
our meat in the supermarket here, it says like 87% pork.
Exactly.
Yeah.
Exactly. And this is the deterioration caused by the big red button. But then this causes health crises. Why do you think we have an obesity crisis? This only started 50 years ago, right? And now half the population's obese. It's because we're consuming stuff we shouldn't be consuming. But it's because of the money printer. This is inflation. So people think, inflation is prices changing. Inflation is everything. It's visible inflation, prices going up. It's semi-visible inflation through shrinkflation. And there's hidden inflation where it's quality deterioration and negative outcomes for the population across all range of things, but largely health. And so that is inflation, right? But it's all because somebody printed extra money. That's it. You do not get those things when somebody cannot print money for free.
Yeah, that's so heavy because in Australia, one of the problems we have at the moment, we have a massive cost of living crisis. And if you think about Maslow's hierarchy of needs, the two areas that are hit the most is housing and food. So, our supermarkets are very much being the scapegoats of this problem, and people are blaming big corporations, that is being big supermarkets, not understanding that there's a much bigger sort of problem behind the scenes
you also, this is not to give everyone a pass. You will always find some people who will try and take advantage of any situation.
Yeah.
Right. So it's not to say all price increases are only ever due to the big red button. Some people think, this is a good opportunity for me to jack the prices up. Okay. To think otherwise would be naive. The fundamental driver of all of this is the corruption of the money. And you also talk about housing there. And so the third big impact of inflation. So the first is the distortion of the free market. The second is inflation in the cost of living and the negative impacts then that brings to you as humans. But the third is asset inflation. And you guys know that the Australian housing market's been on fire for years.
We love our property.
Why do you love the property?
I guess it's the Australian dream to own your own home. It's also the way that many people sort of, there's a bias with a lot of our financial advisors really liking property as an asset class. I'm not sure where it came from, but there's definitely like the Australian dream, and it's also an asset class that's very well understood. It's done very well in Australia. So when it's done well for other people are interested in understanding it and getting into it. I don't know that I can answer that any better.
I get the Australian dream. That makes sense. Everyone should be able to own their own home. It's increasingly difficult because of the second thing. And the second thing is, you talk about it being sort of a store of value.
Yeah, that's what I should have said. Store of value. The house was the store of value. It very much is today. The people want to store their wealth primarily in their home and be set for life and be able to retire.
But why? Why do they have to store their wealth in the house? It's because the money's broken. If you were able to store your value, store your value in the money, you wouldn't need to store it in the house.
Mic drop.
Like if you could go out, do a day's work, and keep that money, and know that tomorrow is not going to buy less. In 10 years' time, it's not going to be worth 30% of what it is today. If it retained its value, retained its purchasing power, you wouldn't need to put it in anything else. Because that's your economic battery. That the money should be an accruing economic battery. I do a day's work today that represents 1 day of my economic energy. That's going to buy 3% more tomorrow, 3% more than that in 2 years' time, etc., etc. Because the productivity of the population should be accruing to the money. And therefore, when I earn it, it's adding to my storage. And I can call on that whenever I need to. That's how I store my value. Is that we don't do that. We're not able to do that because someone's printing it for free. And in a year's time, it's going to be worth less. In 10 years' time, it's going to be worth a fraction of what it is today. So then your question is like, how do I protect it? I buy a house. I buy an extra house and I rent it out. What you're doing there is just trying to get a better store of value for the money because the money's broken. But you don't necessarily go through that explicit thought process, but that's what you're doing. That is what you're doing, whether you're aware of it or not. And why this is the case is that when they're printing extra money, they're inflating the monetary supply. The costs of everything are going up. Your economic output, which you get paid for in Aussie dollars, someone else is printing for free. And so that slice of the share of the overall pie of the economy is declining as somebody's printing their bit for free. Right? So they're stealing the productivity. They're stealing the purchasing power. But by printing this extra money, it causes the prices of everything to go up, including the houses. So if you think about the housing stock is not fixed in supply like Bitcoin. The housing stock is absolutely elastic. You can build as many houses as you want, certainly given the space in Australia.
It's lots of space.
Lots of space, so we don't necessarily have that everywhere. But you're not really constrained from a space perspective. You're constrained from a population perspective and the value of the houses. So as houses are worth more in money, you increase the supply of them as home builders. Because you can generate a greater profitability. But by printing more money, and you've got a reasonable from one day to the next, the housing stock doesn't really change. It takes time to build a house. There's planning, these sorts of things. But if you just go and print more money, and if you divide the money by the number of houses, all the houses are just worth more. The houses haven't become more valuable. You've just printed more money. And so when you compare that with just leaving your money in the bank account, it's better to buy a house. Because then at least it's the value of it is sort of expanding when measured in the extra stuff they're printing rather than fixed. It's just a proxy store of value to try and protect you against the money printer. And this is why the house prices are going up forever. It's just printing more money. And the longer that goes on, it becomes, you have the money printer driving it, but it also becomes driven by speculation as well and by leverage, because the banking sector will offer you loans to buy the houses because they keep going up. And so you can go and get a loan for a second house, but you getting a loan for the second house helps you drive the house prices up faster, right? They become a speculative asset class, not where you live. Homes are just utility. Sorry. Homes are utility assets. Their liability is not assets. When you live somewhere, you pay property tax, there's maintenance, there's all these different things.
I'm sorry, I gotta ask, what dog is it? What breed of a dog? It sounds like a small dog.
She's a toy cockapoo. Yeah, she's tiny. She's tiny. She's very alert. So I'm sorry to the listeners.
I could tell by the bark that it was a small dog. I have a miniature schnauzer and he's very yappy.
Oh, lovely. Yeah, they're lovely. They're a lovely breed. Sorry about that.
I forgot where we were. I hope you don't.
No. So we were talking about the house prices going up.
Yes. Yep.
And so the housing sector becomes speculative, and this is why you see on Australian TV I'm making an assumption here. I'm assuming it's the same as the UK. We have, lots of property shows and buy-to-let portfolios and rebuilding
Lots.
a house and all of this stuff.
Reality shows, home maintenance and improvement. It's all over Australia.
Because you're buying the
Yep.
houses as a store of value, you then
Yep.
realise, you may not even realise why, but being more leveraged to the housing market is a better thing, because if I borrow money cheaper than the rate at which they're printing it, I can buy more houses, benefit from the monetary debasement, and repay the loans. But you're just driving the underlying cause, which is the direct result of the money printer. But that hurts your everyday family, because your everyday family, as you said, is suffering from the cost of living crisis. They're getting squeezed by visible, semi-visible, and hidden inflation. Their health is being undermined at the same time as they're trying to buy a house. But now the houses are more expensive when measured in their daily earnings, because they're also driven by speculation in the money printer. So I'm struggling to afford my day-to-day living, and now it's more expensive to buy a house. So I can't buy a house anymore, unless my wife also works. If we both work, then we can afford to live and afford a house while taking on a load of debt. But if we both work, we don't have time for children. There's more stresses in our life, and we start to see the breakdown of the nuclear family. We can't make the economics work anymore to have children, or have as many children as we wanted, be able to live and keep the roof over your head. And so you have fewer children, and you have more family breakdowns. There's just more stresses. Like, you're undermining the nuclear family through the money printer. And this is all engineered. This is like, the system is corrupted because of the money printer. And it's everywhere. And you can see it. It's absolutely everywhere. But then it has knock-on impacts. So when you have fewer children, and this is why you see declining birth rates everywhere in the West, right? It's because women have been told, right, the most important thing is to have a career, go out, be independent. It's wrong. It's wrong. Like, family is the most important thing. Family.
And dogs.
I think we may have to cut this bit out, but here she is. I'm sorry.
I like this bit.
Yeah. But family is the most important thing. Family, it is. But the last 50 years has been about driving women into the workforce to ensure they can keep the money printer on the road, to ensure that they can keep the benefit of the access to the money printer, because they need to increase the tax base so it doesn't look like they're just printing money for free, which is exactly what they're doing.
Yeah.
And then, because you have declining birth rates everywhere, the pension system doesn't work. The pension system is absolutely insolvent everywhere. And so the way the pensions typically work, and I can't speak to Australia, but how they would work in the UK, is that there's no sense of an investment vehicle or something like that from the government. It's that you pay in and someone else gets the money. The retiree gets your money. You're not paying into a central thing that's invested and then it accrues over time. It's like money in, money out. But the pension system and the promises made associated with that, to the amount when you get to retire and the quality of life you will have when you retire, those promises were made a long time ago. But the demographic shifts means you just don't have enough people coming through. There's not enough young people to support the older people. The older people are living longer. The younger people are increasingly unhealthy, struggling to own any assets, underpaid, less engaged with society, just overworked. The system is broken, right? There is no way to balance the promises you've made with the inputs coming through with the demographics. And so what happens is it goes bust. It goes bust unless you continue to push back the retirement age and you continue to undermine the quality, the real value of what you pay in retirement. And so it doesn't work anymore. So the people working now will never get to retire because it won't exist. Because it can't exist. And so you have all of these secondary and tertiary impacts. But if you think about also the people who aren't in a position to buy a house, so either they're poorer and can't won't be able to get the deposit together, can't get access to leverage, etc., or they're just younger, not ready to buy a house. They increasingly disengage because they see the house prices going up, they see the cost of living pressure, and they think, I'm never going to be able to buy a house.
Yeah, I've read some stats in Australia recently that it takes 10 years and 2 months at this point in time to save up for a deposit, which is a very long time. And that the average first home buyer now is 50s. I'll need to validate this and verify that I'm not just making things up, but it sounds accurate.
Yeah, but is that normal? Absolutely not, because what you tend to do is you buy a house first, then you have children. So if you make it harder to buy a house and settle down, you push back the ability for people to have children. And so you just exacerbate everything again. And if you come to the conclusion, I'm never going to be able to buy a house, what does that mean for you, decision-making wise? It's like, okay, well, there's no point saving. So I'll just start going on holiday. I'll live my best life.
YOLO.
YOLO, right?
Yeah.
So you don't plan for the long term. You don't sacrifice. You put off getting married, put off having children. You think about your quality of decision-making of spend that we were talking about before. It deteriorates further because you're not investing in future productivity, you're investing in enjoying yourself.
Yeah.
And then if you're struggling even further, you are just struggling to survive and everything's getting more expensive, your wages are lagging behind, you cannot save at all, you're living paycheck to paycheck, you're probably living in debt, there's no way out. And so you start making bad decisions. It's like alcoholism or drug abuse or whatever. And then you have mental health crisis for everybody. It's all because of the money printer. It's all the direct result of the money printer. And it's destroying society. But yeah, and this is how everything is just, all the issues we see in our lives are because of the big red button existing. You take that away.
Root cause.
The root cause. If you take that away, these things all resolve themselves. And this is why, like Bitcoiners say, if you fix the money, you fix the world. Because you absolutely do. Because the world is broken because the money is, but it's really not obvious. It's really, really not obvious. But when we talk it through like this, it should be entirely logical. And, people should be hopefully listening going, well, yeah, of course. But unless you can show someone the map, they don't know how to go from A to B. But once you know how to go from A to B, you don't forget it again. It's like you see it once and you remember it forever. And this is why, once the penny drops of Bitcoin, is it changes everything. Because for the first time, you go from thinking the world is deteriorating. I don't understand why. I don't understand how I protect myself, my family, the people I care about, to a position of, yeah, the world is deteriorating. I know exactly why. And I absolutely can protect myself, my family, and the people I care about. And that protection is Bitcoin.
Yeah. Well, let's talk about Bitcoin.
Yeah, because they can't print it for free. They can't print it for free, and they can't censor it. They can't censor it in any way. So even the money you have, because everything we've talked about there is about quantity of money. It's not about the other aspects of money. And you guys will know this as well. We feel it in the UK, increasingly over the West. The money you keep in the bank is absolutely not yours.
You need to get permission.
You need to get permission
to access it. And if you're lucky.
Yeah. If you want to do something, you have to convince them they should let you do it. Which is bonkers. Absolutely bonkers. You're working for something someone else can print for free and someone can stop you using whenever they want. How's that logical?
Yeah, it seems like an extreme case because, across the whole population, it hasn't happened entirely across the board, but we have had many instances of debanking of just normal everyday citizens. We're not able to withdraw cash without being asked all sorts of questions. So yeah, and then yeah, it's a matter of time.
Yeah, you don't have to be debanked to suffer from it. Just try and make an online transaction. Just try and go into the bank and say, "Can I withdraw all my money?" And they'll say no. They'll say, "Oh, what's it for?" But it doesn't matter what it's for. It's my money. But the reality is, it's your money if the government says it's okay and the bank says it's okay. If you require someone else's permission, you are not wealthy. You have to be self-sovereign. And Bitcoin is perfect money. They can't print it for free and they can't censor it. You hold it yourself. You don't even need to keep it in the bank. The fact that we keep money in the bank is as a result of the money being imperfect. It's not the way it should be. Perfect money is something you should just hold yourself. Why would you need to give someone else your money? That doesn't make any sense.
Yeah.
It's my money. I'll keep it myself.
Yeah. I remember Andreas Antonopoulos said very early on that we don't even have an instance in this world where you can pay anyone in the world or locally without going through a third party, without going through a company. So there's no more like, I can't, we go out to a restaurant, have dinner, split the bill. I want to send you money. It has to go through a company. It just seems so and we've accepted it as something normal.
We've been disintermediated from the money, and it's been a deliberate action. And this is why there's a war on cash. There's a war on cash because they can't disintermediate cash. I can give you some Aussie dollars and no one's taking the fee out the middle. No one is censoring it. No one is protecting me or protecting you. They can't. Right, but you make everything digital, they have to pass through a third party. And therefore you have total surveillance, you have total control, and you get to charge everybody for everything. And that's how you subjugate the population. It's just about control. Control and stealing as much money as possible through a combination of inflation and centralization.
Yeah.
For fees. And so Bitcoin solves all of this. Bitcoin solves all of this. Not only does it fix the world, right? It empowers everybody. It removes the state's ability to control your life. It defunds the state because the state cannot take the money from you because they never had it in the first place. You own the money yourself. No one can stop you sending or receiving it to anybody anywhere in the world at any time at the speed of light. No one can even prove you have it. And they absolutely cannot take it off you unless you choose to give it to them. So it massively reduces the power of the state. And so, we are in we're creeping towards total dystopia around the world, especially in the West, with ever bigger governments, ever greater level of interference, etc., etc. Now, this is because they can control the money, because they can take the money whenever they want. If you remove the ability for them to do that, sorry.
She's reacting to the conversation.
She's whimpering. She wants some attention, I think. If you remove their ability to do that, then they have to start acting in the interests of the population. And this is what is so. This is why I think Bitcoiners as a segment are so optimistic, because they feel like they have a greater level of control in their lives for the first time. They have a bright future ahead of them because they can see what everyone else is going to figure out over time. And they also know that once everyone else figures it out, the problems resolve themselves. Because what happens is Bitcoiners start turning elections. And you see this in the States. And so Trump came out and he was explicitly pro-crypto, which is a much broader base, but he was explicitly separating Bitcoin from crypto and creating a Bitcoin strategic reserve and saying that he wants the US to be the number one superpower when it comes to Bitcoin. Whereas the Democrats were fighting it. We're creating an anti-crypto army. We're trying to kill all the Bitcoin businesses through shadow banking interference.
Regulation.
And then the SEC has been trying to create just difficulties for Bitcoin companies through time. Right? Enforcement through regulation through enforcement, not communication. And so what happens is Trump wins all the votes. He wins all the votes. Democrats win no votes from Bitcoiners because the most important thing is fixing the money. So Bitcoiners become one-issue voters. I'm sorry.
That's all right, dude.
I knew we're gonna have to cut this down. Just give me 1 second.
Yeah, sure, no problems at all.
Anya, I'm sorry. I'm sorry about that. I mean,
No, not at all.
I don't know what's gotten into her. Normally she's fast asleep until about lunchtime. I put her out.
I think she's getting triggered by the conversation. That's why we're talking about the problem, and she's just wanting to give the sound effects that she's, very supportive of this.
Well, I'm sorry. I hope it hasn't ruined the podcast for you. Hopefully, we can
not at all
edit that bit out. And so we're talking about the votes. So I guess we can put the restart it here. And so the Democrats win no votes because no one is a single issue voter against Bitcoin. But almost every Bitcoiner is a single issue voter for Bitcoin. So the candidate who is pro Bitcoin wins all the votes. And so there's no point fighting Bitcoin. It becomes table stakes in the next elections around the world. You've got to be pro Bitcoin or else you lose votes. Politicians don't like not winning elections. So they'll be pro Bitcoin. This is just what's going to happen. And the more Bitcoiners you have, the bigger that block of votes that you're winning. And it means the candidates have to be pro-Bitcoin, more explicitly pro-Bitcoin. You even get candidates who are Bitcoiners. And once you're a Bitcoiner, I've never met a Bitcoiner who thinks a bigger government's a good idea, right? It's about less government. It's about more sovereignty. And so eventually, everyone's going to be a Bitcoiner. Way before everyone's a Bitcoiner, Bitcoiners are going to represent a sufficiently large but still small block of the voting population that it changes candidates' behavior. And we're going to start having Bitcoiners in politics. So government starts to fall. You run on a smaller government ticket and you gradually remove the interference of the state because they realize they can't fight Bitcoin. And they realize the logical thing is to embrace Bitcoin because it gives you a competitive advantage. This is what's going to happen to every country in the world. And so as Bitcoiners, you can be massively optimistic about the future because you know we're going to win. This resolves itself. It's a question of how long it takes and the path it takes between now and there. But we know where we're going. We know
that's the path that I'm always speculating on. So I do speculate on Bitcoin, just not the way that people, the traders would think I speculate on Bitcoin. It's more about what's that path going to look like? What countries are going to be friendly towards it versus not friendly towards it? Will there be civil unrest? Are we going to have an evolution or a revolution? These are all thoughts that keep me up at night.
Yeah, and I don't have the answers to them all because it's less about logic and it's more about human emotion as those things play out. But I think game theory wins, human action wins. People tend to do things that are in their interest to do. You learn lessons from other people. If you fight Bitcoin, you lose.
Yeah.
Full stop. And if you ignore Bitcoin, you get left behind. So there isn't a neutral strategy.
Yep.
It's like gunpowder or the internet. It's like you can choose to ignore those things, but if you do, you either end up dead or outcompeted. So you don't ignore them; you engage with them. And this is the same as what's going to happen to Bitcoin over the next decades as it washes around the world and washes society clean, I would say.
I want to ask you, Joe, do you think, because sometimes I'm trying to think of questions to ask, like I see this solution very clearly, I see the problem very clearly, but someone who is entirely new to this, I think they might be thinking, like, are we too idealistic?
I'd encourage them to watch the video because I don't think there'll be anything in the video they disagree with. And if you can watch that video and you agree with every step of it, and you use your own critical thinking, at the end of the video, you will know that you don't want to be on one side of the island. But that one side of the island is so much better than reality. So much better than where we are currently. You already know you don't want to be on that side of the island, but that was better than where we are today. I haven't convinced you. You've got there on your own. This is all just critical thinking. That's all it is. You know, as Bitcoiners, we always say, don't trust, verify. And with Bitcoin, you're just everyone encourages you to not trust anybody and to do your own thinking. And at the core of this is it's all just natural human action. Think about what you would do in those scenarios.
Well, that's kind of what gives me hope. Yeah. What gives me hope about the adoption, because I do worry about, Australia and how that's going to unfold here, and whether, people will be open to it, whether governments will be friendly. But I do ultimately believe that most people are inherently good, and most people want what's best for themselves and everyone else, and that, I guess, truth will prevail.
Well, incentives prevail.
Yeah.
Human action will take hold. And with Bitcoin, you unlock a global free market, because no one can stop you trading with anybody. No one even has to know you've traded with somebody else. There has to be anybody in between. And in exactly the same way as capitalism is everybody working. Free market capitalism, not the distortions we have today where you have more and more government interference and introducing regulations and disruptions to the free market. But free market capitalism is everyone just working in their own self-interest, which ultimately benefits everybody else, because the productivity accrues to the money. Bitcoin is exactly the same. The entire Bitcoin network is everyone just working in their own self-interest, but it benefits everybody else because it makes Bitcoin more secure, more accepted, more trusted by people through the passage of time, etc., etc. You can't beat that. You can't beat a system like that. You can fight it, but you'll lose. The right thing to do is to engage with it and make it a competitive advantage for you.
And understand it. Yeah, absolutely.
And by doing that, you strengthen the network. You strengthen it and help it win faster until it wins. It's not in doubt. It's just how long it's going to take. Yeah, people may struggle with, because it's technology, you have an adoption period. Like it may seem clunky or hard to use or have a high, steep learning curve, these different things. But that's no different from the internet 30 years ago. No one would say that of the internet now. No one would say, oh, it's really difficult to get online. It's not. It's super easy. You live your lives online. You do all your shopping online. You do your banking online. It's easy. It's frictionless. That was not the case 30 years ago. Think about Bitcoin in exactly the same way. 30 years' time is going to be super easy. Everyone in the world can use it. It's just you're early and you're dealing with those early frictions. But those early frictions are what represents the opportunity. Once the penny has dropped and you know everyone else is going to get it. That
was going to be my next question for you. Is any listeners that don't yet own any Bitcoin or don't understand much about it other than, watching your video, do you think they've missed the boat?
No. Well, let me ask you this. Are they going to stop printing money?
No.
Never. Ever. So the Aussie dollar is going to zero. So are you early? Are you late? No.
Early.
Are you early? Absolutely. Because the Aussie dollar is not worth zero yet. It's going to be worth zero because they'll never stop printing it. Your purchasing power of your dollars is going to zero. And you know this because you don't keep money in the bank because it's melting. Everyone already knows this. Everyone knows you don't keep money in the bank for 10 years. You definitely don't keep money in the bank for 50 years. It won't be worth anything.
I thought you were singling me out. Like, I don't keep money in the bank.
No. Yeah, sorry.
Are you trying to $5 wrench attack me, Joe?
No, but sorry, I didn't mean to that to come across quite it's
No,
an
no, it's funny.
accusatory tone. I meant in general.
Yeah.
People, this is not new. People know this. That's why they buy the houses,
Yeah.
right? Because the money's broken.
Yeah.
And so if the money's broken now, they're just going to continue to print money. It's more of the same until it's not worth anything. And so sometimes people ask me for, and I don't talk about price predictions, but sometimes people say, well, what's your price prediction? I say, the only thing I say, well, I wouldn't normally say the Aussie dollar. I'd normally say something else, but yeah, my price prediction is Aussie dollar's going to zero, right? And so you don't want to own it. You want to own the thing they can't print and no one can take off you and stop you sending, and that everyone in the world is going to accept one day. And it's going to be the money. It's going to be the money of the world. Why would I want to own anything else? Why would I want to own a house? Why would I want to own a second house that goes down when measured in Bitcoin? So think about the decision making for the Australian people, where they've gone from realizing they can't keep the purchasing power of the money, so they buy the houses. The housing market gets inflated, and the houses represent more than their core utility value to the family. Now, when you're thinking about your portfolio of houses, you think, oh, well, that's going up in value because it's worth more Aussie dollars every year. You think that's a good investment. If you measured it in Bitcoin, it's losing money. It's going down in value every year. And so as soon as your internal unit of account switches to Bitcoin, you realize the housing is a terrible investment. Why on earth? Why on earth would I be buying houses that lose money over time? I'll own the house I live in because it has utility value for me, but I'm selling the rest of them. I'm keeping it in Bitcoin. Because if I don't do that, I'm losing Bitcoin. I'm losing money. And so what happens? You demonetize all the proxy stores of value that have taken the place of the money over the last 50 years. And Bitcoin just consumes everything. It demonetizes all of these asset classes. Because the asset classes have been purchased, not because of their intrinsic is not the right word, not because of their utility value, but because they've been used as a better store of value because the money's broken. So if you fix the money, you monetize all these things. These are like natural, logical outcomes of just fixing the money.
Yeah. Now that you've said intrinsic, I have to ask you, Joe, can you... I just have to. I think this is... A lot of people get hung up with this. Bitcoin has no intrinsic value.
Okay, well, I would go back to... I thought you were going to ask a different question.
No. Oh, really?
I thought you were going to say...
What question did you think?
I thought you were going to say, is there such thing as intrinsic value?
Well, I have an opinion on that, but...
Okay. Well, yeah, I'm interested to hear your opinion.
I believe in subjective value. I don't believe in intrinsic value, but yeah.
100%. And that's so obviously true. If you're drowning, do you want a gold bar or a life jacket? Life jacket. So how is there any such thing as intrinsic value? There's not.
It has utility.
Right. There's no such thing as intrinsic value. Full stop. A single example proves that's the case. Okay. It's about what you want at a given time, given the circumstances. It's entirely subjective. So to say Bitcoin doesn't have intrinsic value, nothing at all has intrinsic value. Okay. What Bitcoin does have is it has proof of work. So when you have...
She loves proof of work.
Right, we'll cut this bit and we'll put it back in. Hang on.
Okay.
Right, sorry, I'll start again here. So I said Bitcoin has proof of work. Money printing does not have proof of work. You can press a key on a keyboard and create more money. Nothing goes into that. Whereas Bitcoin, you cannot print it for free. And this is one of the issues that people have. It's like, why is Bitcoin valuable? And I would get them to question why they think gold is valuable. No one seems to question that gold is valuable. But why is gold valuable? Gold's valuable because it has a series of qualities that make it an acceptable money historically. The best evolution of money that we've had available to us on Earth. However, it's compromised. It's not portable. You can't send it over the internet. It's hard to verify. You can't pay for small amounts in it, because how do you give change in gold? How do you even pay for a bag of chips in gold? You couldn't do that.
You can't digitalize it. You can't carry it in your pocket.
So clearly it fails on so many different measures. It's not good money. It's just the best money we had. Because it's not good money, it had a paper layer put over the top of it. And so you put all the gold in the gold vaults and you'd issue receipts against the gold. And then you'd say, look, you can come and swap the receipt for the gold whenever you want. But no one ever did, because no one wants the gold because it's clunky and impractical. So you just end up with fiat money. And then over time, they realized they could just print more of that money because no one ever asked for the gold. And then when someone calls their bluff, they just sever the convertibility. And now we just use monopoly money. That's the history of the financial sector, the history of the monetary sector of since 1971. Like, they severed that link in 71. But that's why we use paper. It's not why we use gold. Because gold's imperfect money. Bitcoin's perfect money. Bitcoin's perfect money. And so you can send it over the internet. You can hold it yourself. It's infinitely divisible. It lasts forever. You don't need the paper layer. It is the paper layer. It's the paper layer and the money. It's everything. There's no separation anymore between currency and money. Paper is the currency. Gold is the money. Bitcoin is one and the same thing. It's perfect money. It's the perfection of money. So you don't need anything else. You don't need anything else at all. And so
when I ask,
sorry, to come back to the answering the question, so if you have convinced yourself that gold is valuable, then you're going to love Bitcoin. Because gold is valuable because it fills those characteristics of a money good enough or better than anything else, right? But still imperfect. But one of the core characteristics there is you can't print it. You can't print gold. You can't print it for free. You've got to go and do
it's hard to mine.
You've got to do some work. You've got to do proof of work to bring gold into circulation. You've got to go and mine it. You've got to expend energy. You've got to expend resources to go and get gold out of the ground, and you'll make a small profit margin on doing so. But similarly, if the cost of getting gold out the ground was really low, more people would compete to do so, right? And then you would have the erosion of the profit margin, like any other thing in society. But also, as the gold price goes up, you could dig more out the ground. So it's what's like a hard money, but it has soft edges. It's an elastic supply. Because basically all the gold already exists. It's just uneconomical to excavate it unless the price goes up. And as the price goes up, the supply goes up. But the whole construct there is you're expending energy, doing proof of work to bring gold into existence above the surface. And that's, along with its characteristics, is what gives gold value, right? And this is, people are probably listening going, obviously that's the case. Okay, well, great. Bitcoin is exactly the same, apart from it's better. So you're mining Bitcoin. There's a fixed amount of Bitcoin that will ever exist. Unlike gold, right? There's an unknown amount of gold in the planet, and the gold is absolutely infinite in the universe. It's just that we can't reach it. Bitcoin's absolutely finite. Will forever be finite. And you can't mine more of it as the price goes up. And so it's absolutely scarce. It's absolutely hard. It's totally inelastic. And so there's nothing like that in the entire universe, but it's secured by energy. So instead of, digging massive holes in the ground, expending huge amounts of energy, destroying the planet, getting all the gold out, you're using mining infrastructure, electronic mining infrastructure. It's just electrical energy. That's all it is. And you're just guessing a random number. It is 100% efficient energy money. You're not destroying the planet. You're saving the planet through Bitcoin mining. Because Bitcoin mining incentivizes renewable energies infrastructure globally, lowering the cost of energy for everybody, stabilizing grids, bringing economic empowerment to communities all around the world that wouldn't be able to monetize the stranded energy resources they have access to. Bitcoin fixes everything, including the environment. And that should be very clear why that has value. And the more people that mine it, the more people that compete through a free market process. Not like gold mining. You don't get the rights to mine it if you know the politician. You don't get the rights. It's free for everybody, everywhere in the world, to compete to mine Bitcoin. You just got to try and do it on the most economical basis possible. So you want the fastest computers and the lowest cost energy, which is the energy that already exists. This is why you get the build out of the renewables grid. Because if a river is flowing, the energy exists. It's just not being monetized. So build the infrastructure to monetize it. You have green energy. And so, yeah, Bitcoin absolutely has value. And the more people that mine it, the more secure the network, the more decentralized their network is around the world. So no one country controls it. No one country can impact it materially to any degree. The amount of total power used to mine Bitcoin is in excess of any combination of nation states could possibly put together. So you can't compromise the network. And as more people join it, the more secure it becomes, the more valuable it becomes. So more people join it. The more decentralized it becomes. You can't beat it. Why would you expend energy doing anything else?
Yeah.
Why would you
It's taking a life on its own.
Mine Bitcoin instead. Bitcoin ultimately demonetizes gold as well. Gold is 10 times the size of Bitcoin. It's bonkers. Gold is just terrible, really inefficient energy money. Bitcoin is perfect energy money. So it doesn't have intrinsic value, but it has real world energy value. Someone's had to expend energy to bring that into existence.
Yep.
Not press a key on a keyboard.
I wanted to ask you, Joe, and I'm going to read your quote off my notebook so I don't misquote you. But once you called Bitcoin the most asymmetric bet of all time. What did you mean by that?
Because it can only lose 100%. The most you can lose is 100%. But the most it's going to go up is forever, because they're never going to stop printing money. So when you measure it in something that someone's going to print forever and ultimately print an infinite amount of it, it's going up forever. So if you want to think about how I store my economic energy forever, you have to use Bitcoin. There's no alternative. And it's the most asymmetric bet of all time because most people have no idea, but it's entirely obvious once you connect the dots. And so the total global asset base of everything is about 1,000 trillion. That's stock market, real estate, the bond market, collectibles, all of gold. 1,000 trillion. Bitcoin is 2 trillion. So it's 0.2% of everything. We've already talked about the decisions you make when you understand Bitcoin. You don't buy the other stuff. You sell the other stuff and buy Bitcoin. And so if you are adamant in your view that Bitcoin is perfect money, that everyone in the world is ultimately going to understand, and once they understand, they never go back, then ultimately everybody understands one day. And if everyone understands, everyone thinks like you, and they don't want anything other than Bitcoin. So for that to be 0.2% of everything right now is ridiculous. That's what I mean by the greatest asymmetrical bet of all time. And it happens. It happens once. This is a civilizational change. You don't go back.
Yeah.
Go back.
There's a quote by an Australian Bitcoiner called Peter Dunworth that I absolutely love. And he said, "It's not the big that eat the small, it's the fast that eat the slow." And I love that quote for Bitcoin because, for obvious reasons.
Well, Bitcoin's going to eat everything. Because you can't fight incentives long term. And it's a competitive advantage for everybody. And humans are humans. You can't fight human action. You can try and put structures in place that restrict human action. But we all know those structures break. That's what history is. History is about putting structures in and around humans to constrain what they do naturally. And they last for a period of time, and then they collapse. Bitcoin is a humanity upgrade.
A big one.
A big one. And it removes...
I never thought I would ever seen anything like this in my lifetime. And I just feel grateful every single day that I'm alive to see this happen. Like, it's just, it's amazing.
Yeah, I think we look back in our old age, hopefully, hopefully as in we get to old age, not hopefully this happens. And think, how is it not just so obvious? How is it not so obvious? It's because most people haven't even done a small amount of work yet. And so my encouragement to everyone would be just to start reading something, watch what's the problem, then watch a few more videos, and you'll connect the dots and hopefully never look back, and then take control of your life again. Be optimistic about the future.
Absolutely. And I don't want to keep you much longer because we're already quite long into this podcast. But the last question I want to ask you, Joe, is a speculative one, but you're speculating on your own self.
Okay.
And where do you hope to see Bitcoin in the next 10 years?
As an active medium of exchange, that's the missing piece right now for us. It's seen as increasingly a store of value, especially pushed by the financial participants, financial players, etc. It's absolutely not. It's money. It's peer-to-peer electronic cash. It's not something you put in a vault and never touch. Bitcoin is going to become the medium of exchange globally. We're just trying to remove those frictions at this point. It is coming. You're never going to need to, in my view, sell your Bitcoin, because one day you'll just spend it. You'll buy your shopping in it. You'll pay your mortgage in it. The mortgage will be a lot smaller than it is today. Right? But you'll use it. It's peer-to-peer electronic cash. But it's your long-term economic battery. It is everything. It's your store of value. It's the medium of exchange. And ultimately, it's how you think. It's going to be your unit of account. You don't think in Aussie dollars anymore. You think in Bitcoin. That's where it's going. It just takes time. And so my personal focus next 10 years is like, how do we help? How do we fix medium of exchange?
I have a feeling it will happen. And I'll tell you why. There's one little clue that happened in BlackRock's letter, 2025 letter to the investors and shareholders. A small line that says, if US doesn't get its debt under control, it's going to lose the world reserve currency status to Bitcoin. And he didn't say the Chinese yuan. He said Bitcoin. So it's almost like America has an incentive to push this.
Well, yeah, there's a slight nuance there as well, because they could have easily said gold, right? And that wouldn't make gold the medium of exchange. It would just be the reserve currency. It's what you would hold in your vault.
Yeah, I see where you're going with this.
And so, yeah, I mean, that's absolutely true. Bitcoin will replace the dollar as the global reserve. Well, currency is the wrong thing. It's currency and money at some point in the future. That's not ready. No one's ready for that yet. The infrastructure is not ready for that yet. Many fiat currencies will die completely before then. And I believe we're going to see a reduction in the number of fiat currencies we have globally over time, and they will either move to the dollar or Bitcoin, especially as the US promotes stable coins, which can then eat fiat currencies all over the world and dollarize fiat currencies very easily on low-cost payment rails instantly. But everyone will have a choice. It's the dollar or Bitcoin. But the choice of the US, it'll be the dollar built on Bitcoin, because the US knows the only way out of the insolvency it finds itself in is by owning Bitcoin. And so the way that they all gold in Fort Knox, they already are the biggest Bitcoin holders in the world. And they know their administration is staffed full of Bitcoiners. They know Bitcoin is the only way out. So you've got to own as much Bitcoin as quickly as possible. And you recollateralize the dollar with Bitcoin. By doing so, drive Bitcoin adoption globally, and Bitcoin becomes the partner to the dollar and helps cement the dollar's position as the global reserve currency for a number of years to come. But ultimately, Bitcoin eats the dollar, because why would I want to use the dollar when I can just use Bitcoin? But by enabling the dollar to retain its primary status for longer than it should, it makes the world aware and very comfortable with Bitcoin. So then why do you even need the dollar? That's how I see the future playing out. Obviously I'm going to be totally wrong, but if I was placing money, that's how I see it. That's how I see it unfolding.
Yeah. Well, yeah. This conversation has given me so much to think about, and I'm very grateful that you came on the show.
Oh, my pleasure. Thank
you. Thank you for your time. Lots for people to think about, and I'll drop some links in the podcast description. And yeah, thanks again.
Okay. Well, thank you.
That's it for this week on The Honest Money Show. Big thanks to Bitteroo. Check out why more Aussies are choosing them at bitteroo.com.au. And shout out to our listeners on Fountain, where you can earn sats just by tuning in. If you appreciate the way we cut through the noise, you can support us directly via the QR code in the episode notes. Until next week, take care of yourself and your money.